Good evening, everybody. On the behalf of Nani Palatiwala National Law Club, I welcome you all and a warm welcome to our esteemed speaker. We have honored to have Jayaprakash Somani, Advocate, Supreme Court of India, and CEO of. Is it audible?
Yes.
Supreme Legal LLP. Share his experience in a corporate law. He has more than 65 plus books and he has an experience of 35 years in a legal fraternity. Today, our topic in a corporate litigation is regulatory and compliances action in corporate. So usually people start their business from the proprietary partnership and usually they hesitate to go to the corporate because the corporate has a very complex regulatory and compliances to be get fulfilled. Otherwise, there is a lot of legal obligations comes in a way of their business. So today we have a Jayaprakash Somani sir, who will guide how the regulatory and compliances actions that the company should take so that they should not get catch in any legal complications. Over to you, sir.
Yes. Thank you. Thank you, Manoj, for introducing me. Today's subject is a little bit serious subject because of it is related to corporate. So audience is also very less today. But from the perspective of the businessman, so whatever I'm presenting now, so don't take it so seriously. Focus on your business, focus on your production, focus on your sales. All these compliances, you can get it done through any consultant or you can get it done through any your officer. If you delegate some work to your accountant, some work to your particular salesperson for compliances. So easily you can do the compliances. By taking botheration of compliances, and if you are focusing only on compliances, and if you are not focusing on properly your sales, then your corporate will not grow. So corporate entity, for growing corporate entity, your expenditure should be in a very control and your income should be very high. And when you converted your private limited company to public limited company, and when you evoke the facility of initial public order, that is IPO, when you can raise the funds from the public and that onwards, then your growth will be by leaps and bounds. So very expedite growth you can do. So whatever I am presenting today, just for the sake of understanding, for the sake of the doing the compliances, so no litigation should be there. So very comprehensive way, in detailed way, I will explain today's subject. Today I will try to give whole presentation in English only because corporates know better English. But at the question answer session, if anybody asks me any question in Hindi, I will definitely give the answer in Hindi. So friends, let me present today's subject. Let me share you the screen first. See, regularity and compliance action in corporate. Understanding major regularity authorities in India. Regularity authorities means a government institution which control that specific part, just like a GST corporation is, GST department is looking after the GST. SEBI is looking after the public limited companies, share, debentures, all these compliances. So these are called regulatory authorities. So which are different type of regulatory authorities? Income tax is also one of them. Then what are the compliances frameworks? And time to time, what jurisprudence Supreme Court has evolved. So all we will see in this presentation today. So what is the objective of this webinar? So after attending this webinar, participants should understand India's corporate regulatory ecosystem, functions of major regulatory authorities, corporate governance and statutory compliance, investigations, inspections, and enforcement actions, consequences of non-compliance, director's liability, important Supreme Court principles, practical compliance strategies, and recent development. So all these things you will learn in today's presentation. And definitely, Advocate Manoj is host of this today's program. It is my humble request to Advocate Manoj, when you upload this program on YouTube channel, send this link to each and every corporate in India so that they can know the compliances, they can know the how to get the mastery on these compliances without losing the focus on sales and marketing, because sales and marketing is a vital part of any organization. If you consider your corporate firm as a human body, so your sales is the stomach of that human body. If you are not concentrating on sales, then you cannot grow. Then what is the use of the compliances then? So while doing the compliances, you should not lose the focus on sales. You should not lose the focus on governance. So compliance is the part of corporate governance. 19 to 20 part, in 19 to 20 part, I am elaborating today's presentation. Why regulatory compliances matters? Today's corporation operate under multiple regulators. A company may simultaneously be regulated by MCA, Ministry of Corporate Affairs, ROC, Registrar of Companies, SEBI, Securities Exchange Board of India, RBI, CCI, Competition Commission of India, Income Tax, GST authorities, CPCB, that is the Central Pollution Control Board, State Pollution Control Board, then EPFO, that is Employment Provident Fund, ESIC, that is Employee State Insurance System, then FSSAI, which is related to food, and custom authorities. So all these regulatories is regulate to corporates. Corporates are three types. One is small, another is medium, and third is larger. Failure to comply may lead to, if you not complied properly, timely, then heavy penalties. You have to focus. Prosecution, imprisonment, cancellation of licenses, directors' disqualification, freezing of bank accounts, and attachment of properties, and reputational losses. Golden principle: compliance is a far less expensive than litigation. If you do the compliances timely, the cost of compliances is much lesser than the cost of your litigation. To fight in court, that is called litigation. So litigation cost is always bigger than your compliance cost. So corporate regulatory pyramid. So in corporate, company is a corporate body. So company is taking decision through the board of directors. So board of directors is on top position, then corporate governance, then statutory compliance, then regulatory audits, then inspection, investigation, adjudication, appeal, and then final appeal to our court, Supreme Court. In our law firm, we have separate department, corporate. So we are taking all corporate matters under that department, and Manoj is heading that department in our organization. Whenever you want to get any help from Supreme Court for Supreme Court matters, you can contact me through Manoj, not only for corporate matters, but you can contact us for property matters also, for guidance of property matter also, for guidance of service matter, for guidance of civil matters, for guidance of criminal matters, for guidance of bail matter, all the type of matters, because we are law firm, we have 16 associate with 6 AOR. I'm just giving information about the law firm. I'm not soliciting. I'm not asking you cases to me, because so many lawyers are good lawyers in Supreme Court. So to anybody, you can give the case, but give case to that person who is focusing only on Supreme Court, who is not going to High Court, who is not going to trial court, who is not going to NCLT, who is not going to NCALT, but focusing only on Supreme Court. He can give you a better justice. And a person who is ready to listen your grievance properly, he is not doing any anger with you. Politely, he is handling with your case. He is giving the focus on the success of yours. Such type of advocate is always better to choose. So, part 2, Ministry of Corporate Affairs, MCA. Governing Laws, Companies Act 2013, LLP Act 2008. LLP means Limited Liability Partnership. It governs under LLP Act 2008, but partnership is governed under Partnership Act 1932. So partnership can be a simple partnership without any registration, can be a registered partnership, and can be a corporate body. If partnership is in corporate body, that should be registered with LLP Act 2008, like our law firm. Our law firm is a corporate body. JSS Supreme Legal LLP. So this is corporate. Functions. Incorporation. What is the function of Ministry of Corporate Affairs? Functions: incorporation, corporate governance, directors, annual filings, investigation, mergers, winding up, CSR, NCLT administration. So all these things are controlled by MCA, Ministry of Corporate Affairs. Important sections. Section 3 is related to incorporation. These sections are of the Companies Act 2013. Section 92, annual returns. Section 96, annual general meeting. Section 129, financial statements. Section 134, board report. Section 135, CSR, corporate social responsibility. Section 139, auditors. Section 143, audit powers. Section 166, duties of directors. Section 206 to 209, inspection and inquiry. Section 210, investigation. Section 212, Serious Fraud Investigation Office, SFIO. Section 447, fraud. So these are the important sections. Friend, today's program is related to the corporate governance and statutory compliances. So corporate has to do the these statutory compliances to different regulators. And I am now telling you the about MCA, Ministry of Corporate Affairs. For example, company diverts shareholders' money, MCA orders investigation, SFIO investigates, and directors prosecuted. So, no, your state police or central police have the power to investigate these affairs. So, for investigation, SFIO, which was established under Section 212 of the Companies Act, and that body is looking after the investigation. And then, as per their investigation, charge sheet is filed and then director prosecuted. Then Registry of Companies, ROC, Registrar of Companies, ROC, powers inspection, calling information, show cause notices, compounding, strike off, direct disqualification, director disqualification. Important sections: 248, removal of company; 164, director disqualification; and 167, vacation of office. For example, company fails to file annual return, ROC, strike off company. So in how in very short period you are getting the entire knowledge of corporates, these statutory compliances. Serious, and you have we have different videos on different laws also. But collectively, we are covering in this today's presentation all concerned related regulatory authorities. So next regulatory authority is Serious Fraud Investigation Office, SFIO, established under Section 211 Companies Act, power under Section 1 and 212. Investigates what SFIO investigates? SFIO investigates accounting, fraud, diversion of funds, shell companies, corporate scams. Major punishment under Section 447 for fraud, up to 10 years imprisonment in serious cases. So, to avoid the fraud and wrong decision of the board of directors, so independent director system is there. So near about 50% director should be independent director so that frauds cannot take place then. Not supposed to take the place. But sometimes independent director is not independent, that time it can be happen. And for independent director, anybody can do the independent director. There is one examination of Minister of Corporate Affairs related to the independent director. If you crack that examination, I cracked that examination by 64% marks in the era of COVID. Now I am independent director. I am insolvency professional also. But my focus is only on Supreme Court practice. But I'm giving seminars, I'm giving the lectures on insolvency, bankruptcy code, like today's subject, like corporate affairs. So all subject. And in our law firm, we have started 100% turnkey consultancy to only 5 corporates. Only 5 corporates. Now we have taken 1 or 2 in the process, and we will take more 3 corporates. And entire their compliances, their everything regulatory as which advocates needs to do. And we will design it properly. And we will allocate your 111 officer to do that compliances so that your sales team will not be affected. Your sales team focus on sales, other things will or compliances. So one side compliances will be on proper direction and your sales will be also increased. So such type of focus, such type of guidance, such type of compliances, such type of when litigation is necessary, that time drafting, filing, everything, we will do that for that corporates. But we will not take more than 5 companies at a time because this is not our money earning project. This is our just to give to at least 5 corporates a turnkey consultancy, which is required for that. So just this is information which I have shared. For if anybody interested, they can contact to Manoj Chaudhary regarding this. Part 3, Securities and Exchange Board of India, SEBI. Governing laws, SEBI Act 1992. You will find my books on SEBI, books on company law. Out of that 65 books, so many books of corporate related. You will find various different webinars also on SEBI. So different videos also on SEBI. Manoj, just instruct Shruti whenever she converted this webinar into course. So each and every book related, which is we are covering. So each and every book, big book means Bear Act. Bear Act should be in that course. So SEBI Act, Company Act, all Bear Act should be there. SCRA, Depository Acts, SEBI regulations, functions. What are the functions of SEBI? SEBI protect investors, develop security market, regulate stock exchanges, prevent insider trading. You will find one of my book on insider trading also. Monitor listed companies. Then important power. Section 11 of SEBI Act gives the power protect investors. Section 11B directions. Section 15 penalties. Section 24 criminal prosecution. Major regulations LODR, PIT regulations, takeover regulations, mutual fund regulations. Example, company insider purchases shares before merger announcement. So this is called insider trading. Before merger announcement, if company insider purchases shares to take that advantage, so this is called insider trading. This is an offense. Say we investigate that, then penalty will be imposed on the defaulters. I want to elaborate this with leading Supreme Court case laws. SEBI versus Rakhi Trading Private Limited, 2018, 13 SCC 753. Facts: alleged synchronized and manipulative trades in the securities market. Held, the Supreme Court upheld SEBI's action, emphasizing that trades creating a false or misleading appearance of market activities undermine investor confidence and market integrity. Principal market manipulation and artificial trading practices attract regulatory action even if executed through seemingly legitimate transactions. So this is very good case to understand the SEBI's role, SEBI's control, everything. Then one more regulator who is regulating the corporates, that is RBI, Reserve Bank of India. This is the mother of bank, all bank. Governing laws, RBI Act, FEMA, Foreign Exchange Management Act. Banking regulations, Payment and Settlement System Act. Reserve Bank regulates banks, NBFC, non-banking finance corporations, foreign exchange, payment system, digital payments. Example, NBFC violates RBI directions, license cancelled, penalty imposes. Important power, issue direction, inspection, penalty, license cancellation. Specifically, the corporates who are involved in foreign exchange, who are in export-import business, international business. So RBI regulation is very important in that because FEMA is governed by RBI. So whenever foreign exchange comes inside the country and when foreign exchange goes outside the country. So every foreign exchange, each and every dollar is regulated through RBI. When you are giving online payment also, that channel through RBI. So you have to do the FEMA compliances timely. So all these things required proper attention, proper structure, proper framework, and proper team you should require. And to get the benefit of exports also, that is a major part in exports. If you want detailed knowledge of exports, just go on my app. On YouTube, you find some motivational lectures on export and import, but on my app, you will find courses on export import. Because I myself is MBA International Trade with LLP, and I have taken so many courses all over India before COVID. Physically, I have conducted workshops on export import at Bangalore, Chennai, Pune, Mumbai, Kolkata, Indore, Bhopal, Ahmedabad, Baroda, Rajkot, Surat, Delhi, Patiala, Amritsar. Everywhere I have taken the workshops all over India. But after COVID, I focus on Supreme Court practice. At that era also I focus Supreme Court practice, but Saturday, Sunday I regularly giving to workshops to different cities. But after COVID, we come with online that workshop. But nowadays it is not possible for me to conduct that workshop regularly. So we have recorded and kept on our app all the course. So you will find English course also, which is English to English, export import. And one is Hindi English also. So Hindi English is under process. Hindi English just we finished a few months back, a few days back that course. So that is under process. So when it will get completed, you will get a notification. Then you can buy that course. And lifetime access to videos, lifetime access to study material, lifetime. So how you can grow your business from 0 to 1-star export house and from 1-star export house to 5-star export house. What should be a marketing strategy? What should be the compliance strategy? What should be the documentation strategy? Everything you will get that. So leading Supreme Court case related to RBI, Internet and Mobile Association of India versus RBI 2020 10 SCC 274. Facts: RBI circular restricted entities regulated by it from dealing with virtual currency business. Held, the restrictions was set aside on the ground of proportionality, while affirming RBI's broad regulatory authority over the financial system. Principal regulatory measures must be proportionate and supported by relevant materials. In service law also, doctrine of proportionality is also there. So regulation should be in proportionate. One is a recently developed one regulator, that is Competition Commission of India. And with the grace of Lord Krishna, I am the panel lawyer of Competition Commission of India for Supreme Court, CCI. These are big giant like Google, like Facebook. When they are breaking any rules related to the monopoly, nobody can create a monopoly in our country because of the Competition Commission of India. So Competition Act 2002 is there, and through that act, this Competition Commission of India come into existence. And the appeal from Competition Commission of India goes to NCLAT, NCALT, where company laws appellate cases also there handled by the NCLAT. Competition Commission of India's appellate forum is NCLAT, and after NCLAT, appeal comes to Supreme Court. So Competition Commission of India, CCI, Governing Law Competition Act 2002, objective: prevent cartels, monopolies, abuse of dominance, anti-competitive agreement. You will find my separate webinar on CCI on YouTube. If you make one rule, morning, I will watch or I will listen one Somani sir's one webinar daily. And in the evening, before going to the bed, I will read any one judgment, full judgment. Not full, not line to line, but some facts, some contentions of the petitioner, contention of the respondent, then some case laws refers, just go fastly. And adjudication part of the judges that you should focus to read. So if you keep this rule, definitely 2 to 3 years you require to hear my all webinars, all my videos. Such type of huge work I can do with the help of these my associates. I'm very much thankful to Manoj Kumar. I'm very much thankful to Shruti Kirti. I'm very much thankful to Pooja Rai, who are the host of my different programs. Criminal law related programs is hosted by always Shruti Kirti. Service law related programs is hosted by Pooja Rai, and Manoj Kumar is hosting my corporate law related programs and property law related programs. So Manoj, now next episode should be on property law. Discuss with me the title properly and we will take that. Transfer of Property Act is also good. But if you give the title Transfer of Property Act, nobody is interested. We have to create such a beautiful title so that common person should get attracted with that. And that particular webinar we have to take into Hindi and English mixed language because that is related to property matters. So common public also can listen that. This presentation, okay, it is corporate to corporate. It can be in English to English, no issue. So what are the important sections of this Competition Commission of India, Competition Commission Act, Competition Act 2002? Section 3 is related to anti-competitive agreement. Section 4 is related to abuse of dominance. Section 5 and 6 combinations. Section 19 inquiry. Section 26 investigation. Section 27 penalties. Many times CCI impose penalty on Google 2,500 crore. Then appeal comes to the NCA, ALT, and CLAT. And CLAT always keep the same, or sometimes they reduces that penalties. And again, Supreme Court impose that, or Supreme Court can reduce that in final appeal. So such type of hierarchy of legal appeal is there. For example, cement manufacturer form cartels, CCI impose heavy penalty. Leading Supreme Court case, Competition Commission of India versus Steel Authority of India Limited, Cell 2010, 10 SCC 744. Principal orders directing investigation are administrative in nature at the preliminary stage, and the statutory scheme of the Competition Act must be followed before appellate intervention. Very good case, huh? Part 6, Income Tax Department. Income Tax Department governs to corporate also and non-corporate also. Governing law, Income Tax Act 1961. My guru was a master in income tax. My guru, Nani Palkewala, was a master in income tax. His income tax volumes, books are, today is also, you will find the books. Their team is updating that regularly. And then after delivering more than 500 reported judgment on income tax or taxation matter, they focused, my guru focused on then constitutional matters, and they focus on constitution. And through Keshwananda Bharati case, doctrine of basic structure. So lion's share is of Nani Palkewala to save our democracy through this doctrine of proportionate. So whenever Income Tax Act 1962 word is there, I'm not seeing any letter there. I'm seeing my guru's face there, Nani Palkewala. You can see in my office, Nani Palkhiwala and my God, Supreme Court also. See, here is the Supreme Court. Okay, and here is Nani Palkhiwala. Yes. Always they are on my head. They are protecting me. They are giving me the knowledge. So on any legal subject, I can give the presentation. So what is the important provisions of income tax department which are regulating to corporates related to the income tax matters, assessment, reassessment, search, survey, penalty, and prosecution. Important section 147, reassessment, 132, search, 133A, survey, 271, penalty, 276C, willful tax evasion. Example, false invoices, search conducted, penalty, and prosecution. If false invoices created by corporates just for showing the turnover or with other malicious intention, then income tax department will conduct the search, then impose penalty, then initiate prosecution also. Leading Supreme Court case, Vodafone International Holdings BV versus Union of India 2012, 6 SCC 613. Principle, in cross-border transaction, tax authorities must respect the legal structure of genuine transaction unless the statutes clearly provides otherwise. Part 7. GST authorities. Governing law, GST Act, Central GST Act, IGST, and SGST. One is central and one is state. Important sections 59. Section 59 is self-assessment. Then 61 securities. Then 67 inspection. 69 arrest. 73 non-fraud cases. 70 fraud cases. Pre-amendment structure. Practitioners should verify current numbering after amendments. For example, fake GST invoices. If corporate creates a fake GST invoice, then GST department will take search, then arrest, then penalty. To understand it more better, case law, leading Supreme Court case, Union of India versus VKC, Footsteps India Private Limited 2022 to SCC 603. Principal, refund provisions under the GST framework are matters of legislative policy. Courts ordinarily defer unless constitutional limitations are breached. So you can understand, friends, different type of corporate matter are coming to Supreme Court. Some corporate matters coming from GST, corporate matters of the income tax, some corporate matter of the SEBI, some corporate matter of the Companies Act. So all regulators are regulating, and people who are infringing that particular process, infringing that particular policy of the government, they are doing the mistakes willfully. No regulatory authority is taking action directly. Remember that. They are giving you show cause notice. Before show cause notice also, officer is warning you. But if you are not get the proper warn, then they will issue show cause notice. If you give proper explanation to show cause notice, you can settle your case there. But if you are not doing properly, then litigation will start. When I was practicing in Bombay High Court, that time I was the bar member of CESTAT also, Central Excise Appellate Tribunal. Now Central Service Tax Appellate Tribunal now, that word is. It covers all litigations related to the customs, related to FEMA, related to the Foreign Exchange Regulation Act, related to the excise, related to the GST. All these cases are tried by CESTAT. And appeal comes to the High Court. And after High Court, it comes to the Supreme Court. Such type of hierarchy is there. Part 8, Environmental Authorities. Laws: Environment Protection Act, Water Act, Air Act, Hazardous Waste Rules. Authorities: Central Pollution Company Board, State Pollution Company Board or Corporate Board, I don't remember exactly. Actions: what are the actions these pollution board, state pollution or central pollution board uh, is taking? Closures: they can close the company. Environmental compensation, consent cancellation, and prosecution. Leading Supreme Court cases, two cases are there. MC Mehta versus Union of India, Olem gas leak, 1987, 1 SCC 395. Principle introduced the doctrine of absolute liability for enterprise engaging in hazardous activity. Weller Citizen Welfare Forum versus Union of India, 1996, 5 SCC 647. Principle recognized the precautionary principle and polluter pays principle as a part of Indian environmental law. Part 9, EPFO laws, EPF and MP Act 1952. Provident Employees Provident Fund. Important section: 6, contribution; 7A, determination of duties; and 14, penalty. Example: company deduct PF but does not deposit. Recovery proceedings initiated. Leading case related to this: Regional Provident Fund Commissioner 2, West Bengal versus Vivekananda Vidya Mandir, 2019, 18 SCC 786. Principle: certain allowances that are universally, necessarily, and ordinarily paid for part of basic wages for PF contributions. Very good decision. Part 10, ESIC, Law Employee State Insurance Act. ESIC, Employee State Insurance Act. Coverage: medical, sickness, disability, maternity. Example: employer fails to deposit contributions, recovery and penalty will be imposed. Part 11, FSSAI, Food Safety and Standard Act 2006. You will find one book also of mine on this Supreme Court leading cases on Food Safety and Standard Act. On most of all my corporate related books, case laws books, is compelled by his co-author. Its co-author is Manoj Kumar Chaudhary, because Manoj have their dedication in the corporate segment. He worked in corporate field. He worked in abroad also for so many years. And when he returned from abroad, he completed his LLB also, and he start practice with me in Supreme Court. So friends, if anybody wants turnkey consultancy related to corporate affairs compliance, so all we will set in that corporate. Bigger the corporation, bigger is our the setup. We will get the interest. We will create a beautiful infrastructure for compliances, delegation of authority, and focus on sales also. So that will be an additional add-on benefit from me, because I am a salesperson. Basically, I'm a salesperson because basically I'm a bania. By birth, I'm a bania. So we are always on the success of the business. So our focus is always on the sales. Compliances, we have to manage compliances. So what FSSAI, that means Food Safety and Standard Act 2006, regulates? Food manufacturing, this law regulates. Packaging, imports, restaurants, food chain. Penalties: unsafe food, they are imposing penalty. Unsafe food, misbranding, substandard foods. For example, restaurant sells contaminated food, license suspended, penalty imposed. Then part 12, investigation process. So investigation process, complaint, then notice, then inspection, then investigation, then show cause, then reply, then personal hearing, then order, and then appeal. These are the investigation process. Part 13, appeals, authority and appeals. ROC, regional director, NCLT as applicable. MCA, NCLT, NCALT. SEBI, SAT. RBI, High Court, Supreme Court, depending upon statutory routes. CCI, NCLAT. GST, Appellate Authority, Tribunal. GST tribunals are there when constituted available. High Court and Supreme Court. Income tax, CITA, ITAT, that means Income Tax Appellate Tribunal. Earlier is a trial court, ITAT is Appellate Tribunal, then High Court, then Supreme Court. So ITAT is equivalent to district court, you can say. After that, appeal come to High Court, and when substantial question of law is there, constitutional infringement is there, fundamental right, then you can evoke the door of the Supreme Court under Article 136 also and under Article 32 also. EPFO, Employee Provident Fund. EPFO, appellate mechanism as applicable. ESIC, Employees Insurance Court. CPCB, NGT. CPCB, Population Board's court is NGT, National Green Tribunal, and High Court depending upon the statute. Manoj, we should organize one webinar on the entire tribunals and courts of India. So I can elaborate all type of tribunals, CAT, NCLT, DRT, ITAT, all we can elaborate. And district court, trial court, all what are the jurisdictions, which type of cases they are handling, everything we will cover in that. So keep in mind, note down this point. We will take one webinar, big webinar on that. Part 14, Director's Duties. Section 166 of Companies Act states about the director's duty. A director shall act honestly, exercise due care, avoid conflict of interest, protect company assets, act in good faith. Failure leads to civil and criminal liability depending on the applicable statute. Part 15, top Supreme Court principles. So I'm giving here some cases to elaborate the jurisprudence, corporate jurisprudence declared by the Supreme Court, or you can say shaped by Supreme Court. Corporate governance. On corporate governance, this case law is very best. So Manoj, when we start you have already sent me the write-up of that particular judgment analysis group. I know that. I don't get the time to see that, but within 1 or 2 days, I will finalize that. And whenever we will start the judgment analysis group in Nani Palkhiwala National Law Club, then you take this case, Tata Consultancy Services Limited versus Cyrus Investment Private Limited, 2021 9 SCC 449. We will analyze this entire judgment in that judgment analysis group. Friends, judgment analysis group we are creating, and that will not be free of cost. That session will be with fees, nominal fees 300 rupees per month. And every week we will analyze 1 or 2 judgments. And before analyzing session, we will put that judgment into that group 2-3 days earlier. And gradually all judgment analysis groups members will study that. And those who want to get involved in that judgment analysis speakers as a speaker, they can give us. Then we will give different topic to different speaker, and at the end we will do the conclusion also properly. And what are the pros and cons of that particular judgment, we will let know that pros and cons to the Supreme Court of India also and to our Ministry of Law also, so that they can think properly on that particular case laws, whether that case laws is required now to overrule or not. So that decision can be taken by the Supreme Court. So such type of beautiful support we can give through that judgment analysis group to our nation. Fraud, serious fraud investigation office versus uh, just minute. Tata Consultancy board decision must comply with statutory requirement. Operation and mismanagement claim required satisfaction of legal threshold. So there is no chance for misappropriation, operation, mismanagement like that. This is elaborately given by the Supreme Court in this Tata Consultancy Services Limited versus Cyrus Investment Private Limited. Fraud, serious fraud investigation officer versus Rahul Modi, 2019, 5 SCC 266. Recognize the seriousness of SFIO investigations and the statutory framework governing them. SEBI versus Rakhi trading. Market manipulation prohibited. Market manipulation prohibited. Competition, CCI versus SEL. Competition law procedure must be followed. RBI, Internet and Mobile Association, regulation must be proportionate. Environment, MC Mehta, absolute liability. Tax, Vodafone, legal certainty in taxation. Now, very important and very vital. Manoj, you can break this entire webinar into different pieces also. If you like, by this particular part is very impressive, just cut that part and make it a reel and publish that reel also in hand. So you have to learn this skill if you don't know from Shruti or from Puja. So they will teach you how to break that again. And entire total webinar definitely we will put on the YouTube. But some, for example, such type of corporate compliance checklist. Okay. So what corporate compliance checklist includes? It includes ROC filings, annual returns. So as a consultant, as a turnkey 100% legal consultant, we have to focus on these compliances for any corporates. And we have to create different teams from that corporate who will look after these compliances. ROC filings, definitely it will be done by the CS, company secretary. Annual return, income tax return, definitely by a charter accountant. GST return, accountant. TDS, accountant. PF, accountant. ESI, state insurance formality. Labor laws, your labor officer. Environmental clearance, FSSAI license. RBI compliances, where applicable. SEBI compliances for listed companies. Secretarial audit, statutory audit, internal audit, board meetings, shareholder meetings, and registered maintenance. But don't get upset by seeing such type of huge list of compliance. But very tactfully, you can manage in your organization, each and every person, and you can focus on sales. Don't lose your focus on sales. Always remember, if you are 100 crore turnover company, your target should go to 200 crore within 2 years. Your target should go with up to 500 crores within 5 years. Such type of expansion planning should be there. I remember I was used to take one workshop along with export import workshop. Export import workshop is related to the foreign trade. how to register for entity, how to the marketing, how to the manage the finance, everything A to Z, everything in practical way we are completing in that workshop, which is available on my app in the form of courses. But in that time, I was used to take one workshop in a month, only 1 month, one workshop. That is Udan. That workshop was Udan. That is not recorded now on my app, but I'm thinking, I just afternoon, I had a meeting with my another associate, Pooja Rai. I have given that task to Pooja Rai to remind me after 4 months, because I don't have time during these 4 months to do new things. So after 4 months, just remind, we will take one Udan workshop again online, and we will record that and we'll put on website. What is the Udan? Udan, when you establish any business, then how to expand that business at district level, how to expand that business at state level, how to expand that business at national level. Every tricks, steps, system is covered in Udan. And how to expand that business at international level also. So from top, from small shop to international level branches, how you can create. That is the part of my Udan. So Udans, whenever I will take that workshop online, only once I will take that workshop online, only once, not twice, because I don't have time to take that workshops. But when I take the live online, that may be for 4 to 5 days, but we will record that the different pieces, then we will put it up as a course. But that live workshop will cost 11,000 rupees. If any businessman want to attend, just keep in mind, after 4 months, you will get that circular and you can join that live workshop, live interaction, live question answer. So that is different. So in that finance, how to manage finance of entire your corporation, how to manage accounts, how to manage stocks, how to manage everything, total management system of any international corporations is covered by Udan. So name of that program is Udan, like that. And I was used to that program before COVID, used to take that program before COVID in Taj Mahal Hotel, Mumbai only. Only one place in India where I was conducted that program. Taj Mahal, Taj Mahal Hotel, Gateway of India, Mumbai, once in a month, regularly. I remember I have taken one Udan program in Delhi also, in Taj Hotel. So just I remember that. So don't bother about these compliances. Very tactfully, you have to do the compliance of these compliances. You have to manage the team properly without defocusing on your sales and your expansion. Your expansion should be there. Then part 17, common compliance mistakes. What common compliance mistakes are corporates doing? Ignoring statutory notices. Don't ignore statutory notices, but be aware from the cyber frauds. Confirm that notice, whether that notice is really from that department or not, and then react on that. Otherwise, you will start the compromise, doing the compromise by giving the money from under table, and that is not notice from that particular department. That is a cyber fraud. That can happen. So be careful. Ignoring statutory. Don't ignore statutory notices. Dealing annual filings. Weak internal controls. related party transaction without approvals. Yes, you can do related party transaction, but with the approval of the board. You cannot keep blank on the board and do that related party transaction. Inadequate board documentation, poor statutory record keepings, failure to implement compliance calendars, non-payment of statutory dues, delayed response to investigations. Part 18, practical tips. Now only two parts are balanced. Part 18 and conclusion. Practical tips: establish a compliance management system, maintain a statutory compliance calendar, conduct periodic legal and secretarial audits, train directors and senior management regularly, strengthen internal financial controls and whistleblower mechanism, respond promptly and accurately to regulatory notices, preserve records and document decision making, take legal advice before major corporate actions, encourage a culture of ethical governance. Remember, good governance is the strongest defense against regulatory action. Now, conclusion. India's regulatory framework is designed not merely to punish non-compliance, but to foster transparency, accountability, investor confidence, fair competition, financial discipline, environmental sustainability, and employee welfare. The Supreme Court has consistently emphasized that while regulators possess wide power to protect public interest, those powers must be exercised in accordance with the rule of law, principles of natural justice, proportionality, and fairness. The companies that imbibe compliance into their governance culture are better positioned to avoid disputes, attract investment, and achieve sustainable growth. So, friend, this is the our today's presentation on regulatory compliances of the corporates. I have covered this in very comprehensive manner, extensive manner. Each and every point I have covered. You have to keep in mind. If you are interested in doing corporate litigation, so you should be aware with these all laws, all compliances, and only not you should be master on law in laws, but you should be master with rules also, with rules and regulations. So what is the difference between law and rules and regulations? So law is the statutory law which is passed by the central legislation or state legislation. But rules is always framed by the government body. And rule is the procedure of that law. Rule is the procedure of that law. So rules and regulations, you should have the mastery while you are doing the corporate litigation. Corporate litigations are not complicated. Corporate litigations are very easy. Corporate litigations are very lucid also. But you should have the knack to handle that corporate litigation. And any litigation in corporate start with show cause notice. Before show cause notice also, that particular officer warns you. If you are neglecting that warning, then they are issuing you show cause notice. Then when you are not giving satisfactory answer, then they are initiating the litigation. And then litigation comes to into tribunal, then appellate tribunal, then high court, and then to my court, Supreme Court. Yes, my court. I'm proud. Supreme Court is my court because I and my team is 100% focusing only on Supreme Court. We know what exactly hunger of our court, what exactly court want. Whether that case may be a GST case, that may be an income tax case, that may be a custom case, that may be a FEMA case, any case. But I know what exactly Supreme Court judge's hunger is there to admit that case. And after admission also, you have to focus on proper argument after notice argument so that that can be get into your favor. Okay. So this is the presentation, friends. Initially, only very few people are there, but now so many are joined there. Just I'm unmuting. I'm asking you, you can unmute yourself and you can now uh, share your remark, or you can share your question also, so that I will give the answer. Yes. Book link is there. My books link is there. And Ramesh Chandra Pandey, very, very thanks with good wishes to respected sir. Again, with due respect, regards to R.C. Pandey, advocate. Very good. Thanks. Thanks, sir, for wonderful dialogue. Sorry, I have not spoken a single word in Hindi, because I already told you that, because for this is the special for corporates. But in question answer, you can ask in Hindi, you can give the remark in Hindi also. And yes, just unmute your mic, open your camera, and then give your remark or give. If your network issue is there, then don't open your camera. You can continue with your voice over also. So if you want to ask any question, you can ask. Any remark? Okay. Manoj, and now you can conclude.
Thank you very much, sir. Such a wide length of laws which are covered for the regulations and the compliances that you have given in a nutshell. And those who are basically related to this, they can go to the individual laws and they can go to that statute and learn more about that. Apart from that, we have different case laws related to the regulatory and compliances, which basically what are the laws that we have to adhere, and there is a different laws from the industry's side also that they have to also consider while doing the business. That if the particular industry requires a particular law, that a statute should also be get known to them. Thank you very much, sir. Once again, thank you to all the participants who have this particular webinar. Thank you very much, sir.
Thank you.
Thank you very much. Thank you, sir.
Thank you.